Welcome to the Pink Door Podcast.
Hello.
We're diving deep into the data, as always, but today we have a very specific, very focused mission. You, our listener, have given us the most recent metrics for Pembroke, Massachusetts. That's the 02359 zip code. And this covers everything residential right through the end of November 2025.
That's right. And our job today is really to cut through all the noise. You get these MLS reports, public records, and there's just a sea of numbers. So we're going to synthesize that. November was a really fascinating month because it presented some serious contradictions.
Ooh.
Our mission is to figure out what those key trends really are and tell you. Is the Pembroke market still tightening up, getting hotter, or are we maybe seeing those first subtle signs of it softening?
And we're looking at single-family homes, condos, the whole picture.
The whole picture, exactly, to get a true sense of the dynamics.
Okay, let's unpack this. We always start with what we call the temperature check. So if you're a potential seller in Pembroke right now, you really care about two things: scarcity and speed. How competitive is it out there? What's the clearest indicator of competition staring back at us from this November report?
I mean, the clearest indicator is always going to be scarcity. It's months of inventory, MOI.
And what's that number?
It's standing at 1.19 months, so 1.19.
That sounds almost impossibly low.
Yeah.
Can you give our listeners some perspective? What does 1.19 MOI actually mean in, practical terms?
In practical terms, it means that if not a single other house was listed for sale starting tomorrow,
Okay.
the entire existing supply of homes in Pembroke would be completely sold out in about 5 weeks.
Wow.
To put that in market terms, anything under 4 to 6 months is considered a seller's market.
Right.
So at 1.19 months, you are firmly, deeply in a market of extreme urgency.
Now, I am looking at the data here, and I see the MOI did creep up a tiny bit. It's up 7.03% from October.
It is.
Does that small increase signal any sort of immediate relief for buyers, or is that just, statistical noise?
I'd say it's noise really in the context of that urgency. It might mean 1 or 2 more houses came on the market than the month before, but the baseline is still severe. Inventory scarcity is the dominant feature here. It's what's driving all the competition.
Speaking of competition, let's talk about speed, because this is where we hit our first major paradox in the report.
Yes.
We look at the median days in RPR, basically days on market, and it clocked in at 12 days in November.
12 days, which is still fast.
Very fast. But that is a 100% month-over-month increase. It doubled.
It doubled.
So how can inventory be so critically low, yet the time it takes to sell doubled in just 1 month?
That doubling is, I think, the most crucial nuance in this whole deep dive.
Okay.
It suggests that while the competition is still absolutely intense, buyers are starting to show a return to deliberation.
Deliberation.
Yes. The house still sells quickly, but it's not that frenetic, 24, 48-hour window we saw earlier in the year.
So buyers are taking a full weekend, maybe?
Exactly. They're taking the weekend. Maybe they're scheduling a second showing. Perhaps they're actually taking the time to consult with their attorney before they submit an offer that has fewer contingencies.
So it's not a market failure. It's buyer fatigue giving way to buyer strategy.
Precisely. Buyers are taking a breath. And that's likely due to the ongoing challenges with interest rates or just hitting a kind of psychological ceiling on what they're willing to pay instantly.
And there's always a but.
And here's the second half of the paradox. That competition is still ferocious enough to push the final sale price up.
Okay, so tell me about the money. How close are buyers getting to that asking price?
They're actually exceeding it. The sold-to-list price percentage in November was 100.2%.
100.2%.
And that's up from October.
It is. And critically, that figure is up 2.27% month over month.
Wait, hold on. So the median time to sell doubled to 12 days, which is a pause.
A slight pause.
But buyers are still, on average, paying 0.2% over the asking price. That means sellers are still winning the bidding war almost every time. Absolutely. The market is this strange combination of low inventory, that 1.19 MOI plus intense bidding, the 100.2% over asking.
So the 12 days just means they're thinking a little longer before getting into that bidding war.
Exactly. It suggests properties aren't flying off the shelf sight unseen, but they are drawing multiple offers and resolving at just over list price, on average, within about 2 weeks. It reinforces that the pause is buyers being strategic, not buyers giving up.
That paints a very complex, high-pressure picture. Okay, let's shift gears and talk about the number everyone really focuses on: price.
A headline number.
The median sold price in Pembroke for November was $595,000.
$595,000.
Now, on the surface, that looks like great news, right? It's up a very healthy 4.85% from October's median of $567,500.
It looks like a strong rebound, and it was a necessary rebound from October, but here's the real aha moment for anyone tracking the true value of their property.
Okay.
If we connect this $595,000 to the bigger historical picture, it tells a story of significant recent volatility.
Give us that context. We need to know where this number sits in the timeline.
What's fascinating here is that despite that solid, almost 5% jump from October, the November median price is still dramatically suppressed compared to the recent past.
How suppressed?
That $595,000 median is down 9.85% from just 3 months prior. The median then was $660,000.
Almost 10% down from late summer.
And if you look back 12 months, it's down 8.46% from November of last year, when the median stood at $650,000.
Wait a minute. You just told me the market is fiercely competitive and buyers are paying over asking.
Correct.
But the median price is down almost 10% from 3 months ago. That's a huge correction that must have happened in late summer or early fall.
It is.
So are we sure this November rebound is a genuine reversal? Or could this just be a brief seasonal bounce before prices, consolidate lower?
That's the critical question you have to ask when you see this. The volatility is undeniable. It suggests that buyer price tolerance was hit hard in the late summer, and that caused a drop. November was a powerful recovery month, which proves the demand floor is solid. But we have not yet recovered the price levels we saw earlier this year or last year. That's a critical distinction for anyone tracking their equity. The recovery still has some ground to make up.
So we have short-term price chaos. What do the valuation models suggest about the long-term intrinsic value?
Well, this is where we shift our focus from executed sales to perceived value.
Right.
The median list price in November was a bit higher at $672,400. But what's more important is the median estimated property value. That currently sits at $677,320.
So the estimate is consistently higher than the actual close price.
It is, which indicates the appraisal models are still quite optimistic.
And the long-term trend supports that optimism, even while the sale prices are bouncing around.
Absolutely. The estimated value shows a sustained, robust long-term trend. It's up a solid 4.8% over the last 12 months, and a massive 14.71% increase over the last 24 months.
So the data is telling the listener, your asset is growing in fundamental value. Even if the short-term sale prices are a bit choppy right now because of rates and inflation concerns, it separates the strength of the asset from the noise of the transaction.
Perfectly said.
That's vital context. Okay, let's drill down into the actual activity. We've talked metrics, now let's talk houses. What was physically moving in November? Let's start with that scarcity again. How limited were the choices for a buyer?
The active listing snapshot, well, it confirms the severity of the low inventory. The MLS data showed only 6 active listings in November.
Just 6.
Oh. And the median list price for these 6 properties was high, $679,900. They were clustered, really, in the upper, middle, and luxury tiers.
Where were they priced?
3 of them were between $600,000 and $700,000, and 2 were quite high, ranging from $1.5 million up to almost $2 million.
So if you were a buyer looking for a home under $600,000, you basically had nothing new to choose from in November.
That's correct. And the 6 properties that were active had been sitting a bit longer. They averaged 27 days on market.
Which confirms what you said earlier. The very high-priced, or maybe slightly overpriced listings are the ones that linger past that 2-week median.
Exactly.
Okay, now for the closures. We had 12 properties that actually closed in November. Were these all single-family homes?
It was a good mix, which is always a sign of market health. The top end saw a noteworthy sale.
Which one was that?
A high-end, single-family, 4-bed, 5-bath home that closed for a significant $1,170,000.
$1,170,000. So there's still strength in the luxury tier.
Absolutely. We also saw a cluster of activity in the condo and townhouse market. There were closings at 30 Old Washington Street, and those fell between about $545,000 and $580,000.
Which confirms there's activity across different price brackets and housing types.
Right. It's not just one segment of the market that's moving.
And those 12 properties that closed, they had an average list-to-sold price of 101%.
There it is again.
So again, paying over asking is the expectation, not the exception.
It absolutely is. Now, if we look ahead, we can check the pending data to gauge immediate buyer appetite.
What does that look like?
We saw 14 properties go pending in November, which is a really strong forward indicator for December's closings.
And were these pendings moving as fast as that median 12 days?
Some were moving much, much faster,
Oh,
particularly in that more accessible price range.
yeah.
We saw one 3-bed, 1-bath, single-family property go pending in just 5 days.
Black days and the price.
$399,999.
Ah.
So this reinforces that idea that if a property is priced sharply and it lands below that, say, $450,000 threshold, it moves almost instantaneously. The deliberation only seems to kick in when buyers are spending closer to that median price and above.
Okay, before we synthesize this entire picture, we have to talk about something. A potential dark horse factor that anyone watching this market needs to pay very close attention to.
Distressed properties.
Right. We often see these signals before a true market shift.
This is a critical point. While the overwhelming message of November is low supply and high demand,
The data reported 4 distressed properties in the last 3 months. But, crucially, 2 specific notice of foreclosure sale properties were filed in November.
what were the addresses?
66 Mill Street and 4 Silverwood Road.
Okay, 4 properties over 3 months is not a wave. But the emergence of specific foreclosure sale notices, that means the process is pretty advanced.
It's advanced, and it's a development we cannot ignore. It signals a slight, localized fracture in economic stability.
And what does that mean for the market?
Well, in a market where inventory is the biggest constraint, every single potential new listing matters. If economic pressure pushes even a handful of these properties onto the market as foreclosures, they tend to sell quickly, but often at a slight discount.
This could ease the inventory pressure a little.
It could. If this trend continues into 2026, it could slightly ease that intense pressure, particularly in the lower and middle price tiers that have been moving the fastest. So it's an early warning indicator. Needs weekly monitoring. That really puts the spotlight on those addresses. We should also briefly touch on the lease market for those who are renting in Pembroke.
Sure. The lease activity remains tight and expensive, just mirroring the sales scarcity.
What did we see there?
We saw only 3 new active for-lease properties with a high median price of $2,700 a month.
$2,700 a month.
Wow. And just 1 pending lease at $8,850 a month. So rent is high, volume is low, and that only encourages renters who can afford it to jump into the purchasing side, which just increases competition.
It's a cycle. Okay, so what does this all mean for the listener? Let's bring it all home. Let's synthesize these complex, even contradictory findings.
Okay. If we synthesize November 2025, Pembroke was defined by this battle between extreme scarcity and recent price volatility.
A battle. I like that.
The 1.19 months of inventory and the 100.2% sold to list ratio, they confirm that the seller's advantage remains absolute.
No question.
However, the price story is messy. The median price rebounded sharply from October, which is a great sign of resilience, but it has not recovered the levels of last year. So sellers who price realistically are being rewarded immediately. Those who overshoot the market are seeing their homes sit for longer.
And this is where it gets really interesting, tying in that volatile price data and those emerging foreclosure notices.
Right.
Given the strong, sustainable long-term value estimates and the immediate price rebound we saw, should buyers just expect this aggressive competition to continue unabated all winter? Or could that significant price correction we saw, coupled with the subtle appearance of those foreclosure sale notices, could that signal that the market is finally hitting a tipping point? That first little crack that might give us slightly more inventory and less bidding frenzy in 2026? We're not there yet.
Yeah.
But it's something to watch for.
That tension between demand driven by scarcity and a potential break in supply or maybe buyer capacity, that is what's going to define the next few months in Pembroke. This market is definitely not resting on its laurels.
If you have any questions about today's episode, or if you are thinking about buying or selling a house anywhere on Boston's South Shore from Southie to Sagamore, give Jim Aldred a call. He would love to help you. Thanks for listening, and see you next time on the Pink Door Podcast.